Choosing a mortgage broker can be very tough, but it's important that you get it right. In this video, I'll be letting you know where to start, and I'll be giving you some key questions to be asking brokers before you make your decision. So firstly, broker or bank. Now don't get me wrong, you can get a mortgage directly with a bank and it can be an easy place to start. But on the downside, it's likely going to take around 2 to 3 hours to meet with each bank individually. So it can become very time consuming for you, especially if you're wanting to compare different banks. And at the end of the day, after the 2 to 3 hour meeting, a certain lender might turn around and say that you're just not eligible with them. If you do get turned down by one lender, please just don't give up on the process. We get a lot of clients come to us in the same situation and then we manage to place them elsewhere. As well as this, any bank or building society that you go to will only be able to advise you on their products and their criteria, whereas a mortgage broker will have knowledge on lots of different lenders and their criteria. So you can just save yourself the time and hassle by going with a broker instead. If you are going to choose to proceed directly with a lender, then it's also key to note that you may struggle to actually get through to the lender for updates on your application, whereas brokers have dedicated support lines that they can get through to a little bit more quickly in most circumstances. And above all, to put it bluntly, you'll just be a number to the bank. They'll only be by your side for the small part of the process, whereas a mortgage broker is like the glue that keeps the purchase together. A good mortgage broker will be there right from the start when you're working out your initial affordability, all the way to when you get your keys in your hands. With us, we're even here after the actual purchase is complete. So we will handle any remortgages or future purchases just to make sure that you never pay more than you have to. So a good starting point that I'd recommend is asking for recommendations from friends or family. The majority of our clients are recommended by friends or family, and it's always nice to have that mutual contact in between because it feels like you already know each other. And I generally find that people will only make recommendations on a certain product or service if they're genuinely happy with the outcome. Now, I'd want to make sure that I've done my research fully before buying any product or service, so I'd recommend doing the same for your mortgage. You want to be checking Google reviews, Trustpilot reviews, whichever review platform that you trust, and you'll also want to just check the website and check their social presence just to make sure that the broker is a right fit for you. So next up, we've got the FCA register. So the FCA stands for Financial Conduct Authority, and they regulate the financial services industry. Mortgage brokers in the UK must be authorised and regulated by the FCA. So I'd recommend looking at the FCA register for either the mortgage broker or the company, just to make sure that they are authorised and regulated by the FCA. As I've already mentioned, asking for recommendations from friends and family can be a great place to start, but ultimately you want to make sure that the mortgage broker is right for you. So what do I mean by that? Well, you'll find that a lot of mortgage brokers are going to be pretty much the same, and they'll deal with every case that is thrown at them. Whereas other mortgage brokerages might specialise in a certain area or have an area of focus. For example, at Rose Hill, my brokerage, we focus on helping business owners and the self-employed secure their first homes and forever homes. So next we've got whole of market or restricted panel. Ideally, the mortgage broker that you proceed with will have a wide range of lenders on their panel, and not all brokerages have the same access to lenders. For example, some are part of what's called a mortgage network, where they have a restricted lender panel, whereas other brokerages might have whole of market access. Now, to be totally honest, I don't completely agree with the term whole of market, and this is coming from a broker who is whole of market. All this essentially means is that these brokers can deal with lenders that will deal with them. There are some lenders out there that won't deal with brokers whatsoever, so you need to take this term whole of market with a pinch of salt. But on the flip side, there are certain lenders and certain mortgage products that are only available through mortgage brokers. So you'll want to be clear on any fees that are payable to your broker. You'll find that most brokerages do charge a fee. We charge because it allows us to spend more time on each individual case, and we're specialists in what we do. Your broker should confirm as early into the process as possible what the fee is and when it is payable. Now, when fees are payable will depend on the broker that you choose. So some will charge upfront, some on application, some on offer, some on completion, and some are a mixture. Most brokers will also receive commission from the lender once you complete on your purchase, and this should be shown on any mortgage illustration that's provided to you once the broker makes their recommendation. Now, some people do ask why we charge a fee when we are paid commission by the lender. Now, to put it simply, if we didn't receive a commission from the lender, then our fee to yourself would be a lot higher. So you could essentially see it as the lender covering a portion of your bill. Now, I want to talk to you a little bit about loaded premiums. Now, this isn't mortgage related, but it is protection related. So if you're looking to take out a mortgage, which is going to likely be your largest debt, then I'd assume that you're going to want to have this protected by your life insurance, income protection, critical illness, family income benefit, and so on. If you are looking to take out protection for you and your family, then you want to make sure that the mortgage broker that you're dealing with does not have loaded premiums. I'll say that again, you do not want loaded premiums. This term is pretty much exactly as it sounds. Your premiums will be higher, they'll be loaded, just to put a little bit more cash in the broker's pocket. This is something that I'm completely against, and it's something that you should definitely look out for. And just on a final note, if you're looking for a great mortgage broker, then you want to be looking at this as a long-term relationship rather than a one-off transaction. You'll want to be confident that you can rely on the broker that you choose to be there for any future remortgages, and I mean in advance, so 4 to 6 months in advance, and for your future purchases as well. And it'll also be the icing on the cake if you actually get on with your broker too. So let's hear from you. Are you looking for a mortgage broker? Do let me know in the comments. If you'd like any further information at all, do let me know either in the comments or you can message me directly. All of the details are listed in the description below. Before I let you go, I am obliged to tell you that as a mortgage is secured against your home, it may be repossessed if you don't keep up the mortgage repayments. Thanks for watching, and I'll see you in the next one.